You can have 1 million in 20 years or 2 million in 27 years by investing £20,000 every year in your ISA. And at the end of this video, I'll be sharing a couple that became millionaires in just 8 years by following the methods which I'll explore in this video. So if this is of interest to you, then stay tuned. So we'll start off with the basics. An ISA is an individual savings account, and in the UK there are 4 types. You have a cash ISA, a lifetime ISA, a stocks and share ISA, and an innovative finance ISA. And every year the maximum amount that you can invest into an ISA is $20,000, and any interest or any growth in the account is completely tax-free. With your stocks and share ISA, you are able to purchase stocks, index funds, bonds, and so much more. And if you've watched my other videos, you will know that owning assets, owning capital is crucial in building financial freedom. It's important to note that a stock, an index fund, and a bond are different, and they have different levels of risk. So we'll start off with a bond. A bond is basically when you lend a government or a large organization money for a number of years, and they promise to give you a set percentage of interest for the duration that they have your money. And compared to the other two, the rate of return for this is typically lower. The best way for me to describe the difference between an index fund and a stock is by actually using pizza. So we're going to have 2 pizzas. We're going to have pizza A, which has 0 slices, and we're going to have pizza B, which has 10 slices. Now, when you purchase a stock of a company, you are basically purchasing pizza A. So because there's no slices, you only have one type of share. Whereas if we compare it to pizza B has 10 slices, and each of those slices represent different companies. It could be Facebook, Apple, Tesla, Google. And so when you purchase one share of an index fund, that one share is made up of 10 different companies. And the reason why people love index funds so much is because it helps to spread out your risk. If one of those companies was to go bust within the index fund, you still have 9 other companies that you've invested in, sticking to our pizza example. Whereas if you compare it to pizza A, which had no slices, if that pizza goes bust, then you'd lose all of your money because there's no other companies that you have bought into. The most common index fund that you probably heard of is the S&P 500, and this is basically made up of the top 500 companies in the US. So how can this make me a millionaire? So you're probably wondering, how does this all tie together? Well, if you invest £20,000 every year, multiplied by the average return of 8%, times by the impact of compounding, then you will be a millionaire in 20 years. And we can break that equation down even further. So the £20,000 actually comes from the tax-free investment allowance that you get with your ISA every single year. The 8% return is based on the average stock market return since the 1950s. In fact, it's even higher at 10% when you use the S&P 500 as a proxy, but for the sake of my equation, I thought to reduce the percentage ever so slightly. And then the compounding effect comes from what happens when you reinvest any profits that you gain back into your investment pot. And from a previous video, which I'll link somewhere on the screen, I talked about the powerful impacts of compounding and how it's created billionaires like Warren Buffett. So in short, that's 1 million in 20 years and 2 million in 28 years if you stuck to the £20,000 a year investment. However, as people tend to progress in life and progress in their career, the amount of disposable income that they have increases, and so you could potentially increase the amount that you're investing every month and therefore get to your target number a little bit faster. And as I mentioned at the start of this video, there was a couple who got to their financial freedom number in 8 years just by doing the methods that I've shown in this video. So again, if you're interested in hearing their story, then stay tuned to the very end. And if you haven't done so already, don't forget to subscribe and to like and to comment. So you're probably wondering, how can I invest in the stock market? Well, I'm going to break it down for you in 4 simple steps. The first step is to pick an investment platform. There are so many. You've got Vanguard, Hargreaves Lansdown, Trading 212, Free Trade, eToro, and the list goes on. My personal favorites are Vanguard and Trading 212. When choosing an investment platform, it's important to look out for the following things. 1. Are there any fees associated with buying or selling of your stocks? 2. Are there any fees associated with even having an account? 3. How many stocks does a platform allow you to have access to? Some platforms have a better exposure to different stocks and index funds than others. 4. Are there any sign-up bonuses? So will you get a free stock? Will you get some money back in your pot for you to invest as a goodwill for using their platform? These are some of the things that you should take into consideration. Step 2, create an investment budget. Now, I know the calculations in this video have been based on investing $20,000 a year, which is roughly £1,666 a month. However, you don't need that amount to start off with. You can start off with £50 a month or £200 a month. The key thing is picking an amount of money that you can consistently invest month in and month out. Reason being, it helps to make your investing as efficient as possible, and it gives you a really good dollar cost average. And the best way to do this, once you have decided how much you want to spend in investing every month, is by setting a direct debit. 3, do your research. Don't buy an index fund or a stock because it's super trendy. Make sure you have an understanding of the companies. Check if investing in the index fund or the stock is in alignment with your own personal finance journey, just because if done incorrectly, it can have a really negative impact on your finances. And the purpose of investing is to actually be better off and not worse off. Number 4 is increasing your investment amount. And this only matters if you have the first 3 things locked in. And the reason why it's super useful to increase your investing amount is because it helps to achieve your goals a lot faster. And the 2 options that you've got for increasing the amount that you are investing every month is either to A, increase how much money you're getting every month, and then taking the difference and investing it, or B, trying to save more by reducing the cost of your lifestyle. At the start of the video, I made reference to a couple that became millionaires in just 8 years by having normal paying jobs in America. And on YouTube, they are known as My Rich Journey. And I actually came across them in the pandemic, and in essence, what they did as a couple was maximize how much money that they were investing on a monthly basis whilst keeping their living expenses to a minimum. And they took creativity to a whole new level. So I'm going to break down into 2 categories the different things that they did to help achieve being a millionaire and retiring at the age of 39 and 40 respectively in just 8 years. Here are some examples of the things that they did to increase the amount of money that they were getting. First, they took additional job roles by working for Uber in their spare time. Secondly, they rented out their property. Thirdly, they sold any items that they created or didn't need on marketplaces such as Facebook and Etsy. And fourthly, they took advantage of currency differences. They were able to earn in a higher currency and sometimes live in places that had a low currency value, and the difference in that they were able to invest. And here are some of the things that they did to reduce their living expenses. So 1, they got rid of their expensive car and purchased a minivan outright. 2, they lived inside properties whilst they were flipping them. 3, they were able to leverage credit card rewards to go on discounted holidays. And 4, sometimes they were able to completely eliminate the cost of living somewhere by exchanging their services and knowledge for free accommodation. And with the additional money that they gathered, they were able to maximize their 401k, which is equivalent to the self-invested personal pension pot. And with the money that they raised, they invested in index funds and were able to achieve financial freedom in 8 years. They were very clear on what their FIRE number would be and would track it as a means of encouragement and additional motivation when they needed it. So they are a testament that it is possible to become a millionaire sooner than 20 years if you're willing to put the work in. And that brings me to the end of this video. I hope you enjoyed it. If you did, don't forget to like, to comment and subscribe, and I'll see you in my next one. Bye!